Good evening. I hope we are all fine. All right. So, in today's session, we are going to talk about, or we are going to try our hands on a question under budgeting, right? For budgeting, for that particular lecture, I didn't solve any question under it because no question was included in the slide. So I've selected some questions. One question we tried it during tutorials, and then another question to question bank, right? So in this session we are going to understand how to solve like that particular kind of question, and then if we are to see a similar question, how we are going to go about it. All right, so kindly like this video for me, and also subscribe if you are new to this channel. All right, so this is the first question, and this first question is saying that you have just assumed the post of a cost accountant at Lani Limited. After induction week, the financial controller, Miss Marjorie gives you the data below. So this data consists of the sales for the year. So you sold some at Mamprobi, Teshi, Abekan Pass, where the product here is Agazi and Deluxe, right? So here they are with their values, which were so the sales value is what you are seeing here. And then here is the standard data per unit. So how much it costs, or the materials, or the cost of material we use in producing them. So we have the direct material here, which we use Kakadro and then Hentia. So Kakadro costs 2 Ghana cedis per kilogram, whilst Hentia costs 1 Ghana cedi per kilogram. We use 35 kilogram of Kakadro for Agazi, and then 70 kilogram for Agazi, 70 kilogram of Hentia for Agazi. And then for Deluxe, we use 20 kilogram of Kakadro, and then we use 60 kilograms of Hentia. The same way when it comes to the labor, we use skilled and then unskilled labor. So for skilled labor, we use 4 hours for Agazi, and then we use 4 hours for Deluxe. But for unskilled labor, we use 6 hours for Agazi, and then 3.5 hours for unskilled labor. And we have their rates here, which is 25 and 20. So this is basically trying to tell us that this is trying to print to us the cost of production, because remember, the cost of production will include direct material, direct labor, and the likes, right? So we also have finished goods here. So we have, let me see the dates. Okay, the date wasn't shown here. Right, so the date was shown here. Right, so this is for 1st August 2022. And for 1st August 2022, this was the opening. So this was the value of the finished goods we were having. So this is more or less like opening stock. So 64,000, 640,000, and 900,000. And then we had a closing stock of 320,000 and then 450,000 for Agazi and Deluxe respectively. Now, you have here that fixed production overhead and direct labor hours per annum were budgeted at 15,275,000, and then we also have 3,818,750 hours respectively. So the fixed production overhead is this, and then the direct labor hours is this. So all production overhead is fixed. All production overhead is fixed and is absorbed on direct labor hours basis. So When we find the overhead absorption rate, you multiply it by the direct labor hours, right? So 4 plus 6 is 10 for the Agazi. And then this one is 7.5 for the Luxy. So when we find the overhead absorption rate, we are going to multiply by it and then get our overhead cost. Now, administration, selling and distribution expenses are absorbed on 20% of production cost, right? So meaning that when we get a production cost, 20% of it is going to be what? Our selling and distribution expense. Then as a policy, the company makes profit of 33, 1/3% on selling price. So on selling price, right? So meaning that if we're able to find the cost of production, then we have to what? Make sure we scale it in the sense that 33 whole number 1/3 over 133. We have to add the 33 to 100% because it's being done on what? Selling price. Now, there is the this thing for the question. The question is trying to say that we should prepare the following budget. We should prepare the direct material budget, which will consist of the purchasing budget and then the cost budget. And also we should also prepare direct labor hours, which should contain utilization budget and then cost budget. Now, the third one is for us to also prepare production budget, and also we should prepare budgeted profit or loss statement. That's for this question, right? But before you even prepare the direct material and then the direct labor, you should know the number of units you want to produce. Once you know the number of units you want to produce, then you can go on and then prepare the direct material and then direct labor, right? Because if you don't know the unit you are going to produce, then how can you even account for the cost for the labor for producing this particular unit? Get it? So with this question, I solved the C first before I started the rest because the C will give you the details that you need to be putting into the rest. All right. So now, prior to this, if you also need to produce or prepare the production budget, what will happen is that you have to get the units that you sold or the unit that are supposed to be sold. Because if you don't know how much you will sell, you don't know how much you produce, right? So you have to also keep that in mind. Now, if opening and closing stock were to be in existence, they were not to be in existence, then anchor production will be equal to sales. But since there is an opening stock here in this question, there is a closing stock here in this question, then we are supposed to do some adjustments. All right, so let's jump on to what I actually did. All right, so I stated here so that if you are not even hearing me, you can just read this and then get it. So since sales, closing stock and opening stock was given in value, what we are going to do is we have to find the cost of production and also find the selling prices for us to get the unit. Because for us to do everything, what is the question? For us to prepare the production budget and the likes, we have to know the units. Because if you don't know the unit, you don't know the number of units you are going to produce. You have to find the unit. Now, for us to find the unit, we first have to find what? Because everything here was given to us in value. Because the sales was given to us in value and not in units, we have to find the selling price per unit and then the production cost per unit. For when we find the selling price per unit, we are going to know the number of units we sold, and when we find the production cost per unit, we are going to know the value of the number of units for the closing stocks, right, and then the opening stocks. So basically, that's what happened here. Now, for us to find the cost of production, we have the normal cost of production that we know. find the direct material, the direct labor, and then the production overhead, right? As what we normally do in cost and management accounting. So for the direct material, it was given to us that it costs 2 cedis per kilogram for kakadro, right? And then when we are to produce agazi, we use 35 kilograms. So 2 times 35 kilograms is going to give us 70 cedis. Now, Hintia as well, it costs 1 cedi, and then we use 70 kilogram per, we use 70 kilogram of Hintia when we are producing agazi. So 1 times 70 is going to give us 70. Now, when we add it, our total direct material cost per unit here is 140. Now, that's for agazi. When we go to the luxury as well, 2 cedis for, I'll be sending this question into the Telegram group, a Telegram channel also, so that you can be watching and then following this. It costs 2 cedis, and then we use 20 kilogram of kakadro to produce the luxury. So 2 times 20 is what? 40. Let me open this side. Come. All right. So now we use 20 kilogram here for the luxury, and then 60 kilogram of Hintian for what? The luxury as well. And it costs 2 CD when we are using kakadu, and it costs 1 CD when we are using Hintian. That's why you are seeing this here. And multiply, you are getting 40 and 60 respectively, making our total material cost for the luxury to be 100. Now, when it comes to the labor, we have skilled and unskilled. It costs 25 CD to use skilled labor, and it costs for 20 CDs to use what? Uh, Unskilled labor. Now, for skilled labor, you use 4 hours in producing 1 unit of agazi. That's why you're seeing this 4 here. And then we use 4 hours when we are producing what? The luxury. And that's why you're seeing this 4 here. So now when it comes to unskilled labor, we also use it costs 20 cedis, and we use 6 hours to produce agazi when it comes to unskilled labor. That's what you're seeing. And then we use 3.5 hours to produce what? Skilled labor. That's what you're seeing. So when we multiply, we are going to get 100 for skilled. When it comes to Agazi, 100 for skilled, and then unskilled is going to be 120. Now, when it comes to the luxury as well, it's going to be 100 and then 70 respectively. 25 times 4, 20 times 3.5. And making a total, the labor cost per unit here to be 220 and here to be 170. Now, if we are to move on to the overhead, remember the cost of production include direct material, direct labor, and then overhead or production overhead. Now, production overhead was given to us. They said that fixed and production overhead, fixed production overhead and direct labor hours per annum were budgeted at 15,275,000, and then 3,818,000. He's calling. Sorry. So, all right. So now, if we want to get the overhead, we find the absorption rate, the overhead absorption rate, and which is going to be the fixed production overhead over the direct labor hours. Now, when we do that, we multiply it by the labor hours that were used by each of the labors, because they said they absorb it on the budget on the labor. So they said all production overhead is fixed and it is absorbed on direct labor hours basis. So now we find the direct labor hours for the fixed and then the for the skilled and then unskilled labor, right? So here I divided I found our absorption rate and I multiplied it by 10, which the 10 is the total labor hours you're having here, 4 hours, and then 4 plus 6, 10. That's why I'm having this 10 here. And then I had 40. Now for the deluxe, it is what 4 plus 3.5, which is making 7.5. And then I'm getting the same thing multiplied by the 7.5, getting 30 here. Now this will let our cost of production to be 140, 220 plus 40, and then making 400 here, and then 100, 170, 30 plus 300, making a 30, 100, 170 plus 30, making 300 as the cost of production for the Luxy, 100 for the cost of production for Agazi. Now, the admin expense we are having here is 20% on the cost of production, as illustrated here. Right, so they said that selling and distribution, administration, selling and distribution expense are absorbed on 20% of production cost. So 20% of production cost here is 400, here is 300. 20% of it, here is giving us 80, here is giving us 60. When we add, we are going to get 480. Now, when it comes to finding the profits, they told us that the company makes a profit of 333%, 333, 33 whole number, 1 over 3% on selling price. So that's the same thing here. So because it's on selling price, I need to scale it up. So making it look like this. Right. Then you multiply it by the cost, the total cost you're having here. So the total cost you're having here is 480. That's why you're having 120 here. And when you do the same thing for this one, you're going to get 90. Or when you just leave it like that, like this, and you are going to get 0.25. So you can just use 0.25 times 480 and then 0.25 times 360, and you're going to get your profit. Now, after everything, we are getting what a selling price to be 600 for Agazi, and then selling price to be 450 for Deluxe. Now, we have our cost of production here for Deluxe and Agazi, so we will be able to know the number of units that was available at the beginning and the closing, or at the end of the period, right? So fast forward, because we've been able to identify the selling price per unit, we are going to find the total number of units that were sold. So to find the total number of units that were sold, we look at the sales for the year. The sales for the year here, we're having 25. Remember, there's three zeros at the top here already, and we are still having 25,000 here. All right, sorry. So now just add them to get our total sales. So I added all of them, and then I had 75 million for Agazi, and then I had 85.5 million for the Luxy. Now, for us to get the units sold, you have to what? Divide the sales value by the selling price per unit. So for Agazi, 75 million divided by 600, which is the selling price you're having here, and we had 125,000 units. And then for the Luxy, it was what 85.5 million divided by 450 as the selling price you're having here. And then we had what 190,000 units. So these were the units that were what actually sold. So this will even help us to do what? To prepare our production budget, right? So now let's move on to solve for the closing unit and then the opening stock unit. So the closing unit is going to be the value of closing stock divided by the production cost per unit or cost of production per unit. Now for Agazi, the closing stock we're having here is what the value is 320,000. So 320,000 divided by the cost of production per unit or production cost per unit here. The production cost per unit, the actual production cost is 400. So that's the 400 we're having here. We divide and we had 800 units. The Luxy is 450, 450, sorry, 1,000 divided by the cost of production you're having here is what 300. Now, when that happens, you are going to get what 3,000 units. Now, sorry, we are going to get 1,500 units. So this means that the opening stock, right? The opening stock for the closing stock for Agazi is 800 units, and then the opening stock for the Luxy is 1,500 units. Now, when we move on, we move on to solve for the opening stock as well here. Now, it's also the same as the value of the opening stock divided by the cost of production per unit. The value of the opening stock we're having is 640,000 divided by the cost of production per unit as we're having here. So we get 1,600 units. And then for the Luxy, it's 900,000 divided by its cost of production, which is 300. Now, cost of production per unit, which is 300. Now we are going to get what 3,000 units. So the opening stock for Agazi is 1,600 units, and then the opening stock for the Luxy is 3,000 units respectively. Now, because we have this information, we can move on to prepare our production budget. Now, production budget is keenly on the number of units we sold. So the number of units we sold, so that's why we actually prepared the first schedule to get the number of units sold. So the number of units, because if you know the number of units sold, you wouldn't know the number of units produced. So the number of units sold will come. Now we add our closing stock, because if we're expecting to have a closing balance at the end of the year, then we have to include it to our production, right? Now, we less our opening stock. If we are expecting to have an opening stock at the beginning of the period, we take it out, right? So we less our opening stock. Now we get the actual units produced. Now, when we get the actual units produced here, so as you are seeing, units sold plus closing stock minus opening stock. In the lecture video, I explained that. Then we get our what units produced. Now, our units produced for Agazi was 12,124,200, and then for the Luxy 188,500. Now, the production cost per unit is 400 and then 300 respectively, as we did up there, right? So now, for us to get the total production cost is going to be what? 49,680,000. And then that's for Agazi. And then for the Luxy, 56,550,000. Right? So that's what we are seeing here, which is the unit produced multiplied by the cost, multiplied by the production cost per unit. Right? So we further move on to prepare our purchase cost budget. So now we've actually prepared our production budget. You see, that's why I started first, because if I don't do that one first, I wouldn't be able to do the rest. So I did the production budget first so that I can get the units produced. Now, because I have the units produced, I can get the material requirements and then the cost of material. Right. So that's why I move on to now doing the direct or the purchase cost budget for the direct material. Now, we start with the production unit. So the unit that we want to produce is what is going to let us know the materials we need for the production, right? So the unit produced resolved up here is coming here. For Agazi is what we are having here to 124,200, which is repeated here and here. And then the Luxy is 188,000. Just I say the only nipa phones oh, 188,500 and 188,500. That's what we solved up here. This and this. Now, we were told or we were given that the production requirements per unit, we were told that the material requirement to produce Agazi per unit is for 35 kilogram, and it was given in this question. It was given here. That's the standard data per unit product. Here for material is 35 kilogram per unit. So we bring our material requirements per unit. So for us to produce 1 unit, we want to produce 124,200 units. But 1 unit will use what? 35 kilogram. And then for Agazi as well, so we want to produce, or the production unit is 188,500. And then the unit needed to produce this, we need 20 kilogram to produce 1 unit. This is in referration to Kakadro. So we will need 35 kilogram of Kakadro to produce 1 Agazi, 20 kilogram of Kakadro to produce the Luxy. Now, for us to get the total number of the total units of Kakadro we need to multiply. So we multiply the production unit by the material requirements per unit. We are going to get the total unit. So here we will need 4,347,000 units of Kakadro for Agazi. And then for the Luxy, we will need 3,770,000 for the Luxy. So we need Kakadro, this Kakadro for this Kakadro for this. In total, we will need 8,117,000 kakadro for both of them, right? And that's in total. Now, when we come to Hwentia as well, for Hwentia, to produce 1 unit of agazi, we will need 70 kilogram of Hwentia. And then to produce 1 unit of Deluxy, we will need 60 kilogram of Hwentia. When we multiply them, we are going to get the total units that we need for them. So that's why we are having this here, the total units and the total unit here. Now, that's the total units. Now we want to know the cost or how much it will cost for us to purchase them. So the price per unit comes in here, and then we multiply the total unit by the price per unit. Now, when they are multiplied, we get the purchase cost of the material. So the purchase cost for agazi, we will need this amount, which is 8,694,000. And then we will need, for the luxury, we will need 7,540,000. Mind you that when it comes to you writing money, you have to bring the signs. So I forgot to bring it, but please don't forget during exams. So during exams, so I'll bring the sign. And then the unit as well. For here, I've indicated unit, so it's here. So cost, sign, sign, and then sign. Now, after doing that, you get a total for both of them, right? After doing this, move on to the direct labor utilization and cost budget. Mind you that this as well can't be prepared without a production budget, because you will need a number of units for you to produce before you know the labors, then the amount of labor that you need to produce that unit, right? You can't be there no, and then you just want to use labor without knowing the number of units. That's why we prepare the purchase budget first. So after doing that, we bring in the same unit here as we are having here. Now, it's to produce 1 unit of agazi, you will need what? 4 hours. For skilled labor, 4 hours per unit. For the luxury, 4 hours per unit as well. So when we multiply, we get the total hours that we need for agazi, and then the total hours that we need for the luxury. Now, when this happens, I think now I don't even need it anymore, so that I can get a full screen for this. Now, when we get this, the total hours, you do the same thing for agazi as well. The number of units we want to produce, where the hours required per unit is 6 hours for unskilled labor for agazi, and 3.5 hours for the luxury, right? When we multiply them, we are going to get the total hours that we need. After getting the total hours that we need, now we want how much it will cost in total for those hours. So we multiply by their rate respectively. For skilled labor, in the question is 25, so 25. And then for unskilled labor is 20, right? So we do that. Now the labor cost will be the total hours times the 25, right? Then we get the total labor cost here for agazi when we are using skilled labor, and then for the luxury when you're using skilled labor. So the total is what we are having here. Now for unskilled labor as well, we do the same thing. We multiply the total hours times the rate. We get the labor cost here. We get the labor cost for the luxury, and then we add the two, and then we get the total. So this will be the direct labor utilization cost, right? And mind you, if you don't prepare, so if you are giving anything, first start from the sales budget, because you know the sales unit. You start from the sales budget, you come to the production budget, because if you don't know the sales or what you want to sell, you wouldn't know what to produce. Now, after doing them before you come to the direct material and direct labor, because now you know the units that you want to produce. Now, what material will you need for you to produce those units? And how much labor will you need to produce those units? Right? So that's how it works. Okay. Now, the next part of the question told us to prepare a budget profit or loss statement. Now, for the profit or loss statement is what we know as accounting students already. The sales minus the cost of sales, we get gross profit, we less expenses, and we get net profit. Now, I did this workings for the cost of sales. If you want to get a cost of sales, we know is the opening stock, then we add purchases, right? But here, we are doing what? Not buying, but we are producing. So we add a cost of production. Now we add a cost of production and we less closing stock, like what we normally do. Opening stock, add purchases, then less closing stock. That's the same thing here. So opening stock, we add purchases, then we less closing stock. Now when we less closing stock, we get a cost of sales for them. So when we get a cost of sales for them, we come in and put them here. Here, I've illustrated them in million, right? So that the figures will be small. Where the figures will not be plenty or will not be big. Now, the sales here is 75, and then when we add them is 160. Remember, this 75 is the one that was given in the question. When we added all of them, we had 75 million, right? So when we added all of them, we had 75 million for Agazi, and we had 85.5 million for Deluxe. Now, the cost of sales is what we are having here, 50 million and 57 million. So I brought them here as well. Now, when we subtract the sales from the cost of sales, we get a gross profit. Now, after doing that, remember our expenses, selling and administration, admin expenses were 10% on cost. So we find it's 20% on cost. We find 20% on the cost of sales. 10% of the cost of sales, we get our what? Expense, the administration and selling expense. Now 10% on 50, 0.2 times 50 is 10. That's why you're having this 10 here. We do the same thing, 0.7, 0.2 times 57, 11.4, the same thing here. You get it. Now, net profit is just going to be what? 25, or gross profit minus the expenses. Do the same thing. Or if you want to calculate the net profit straight away, remember it was what they normally do it on selling price, 33.3% on selling price. So you can, when we factored it, we had 0.2, so you can do 0.25 times the cost. Was it a cost? Sorry. 0.25 on the cost, which is the cost of sales plus the selling expense you're having here. You are going to get the same profit here, right? So you do the same thing for this as well, and you are going to get the same thing. So this is a bit easier. I hope you understand this. Now, if you don't understand anything I said here, you can reach out to my DM and then I will assist you. Also, I will be sharing the document to the Telegram channel as well. Now, let's quickly move on to the second question. The second question is also under budgeting. Now, they are saying that CAOK Limited budgets to sell 10,000 play cubes. Now, here you could see that they've given you the budgeted selling unit or the sales unit, right? So when you are preparing your production, it's straightforward because you have the sales unit already. Cubes are 10 cedis per cube in September this year. The inventory of finished cubes at the end of August is expected to be 3,000 units, 3,000 cubes. Here, closing stock as well has been given to you in units already. You don't need to do any further calculation. Now, it is budgeted to be 4,000 cubes at the end of September. So finished goods is 3,000 here, and then now they are planning to let it be. This is more or less like opening stock is 3,000, and they are budgeting that it will increase to 4,000 at the end of the, so meaning that closing stock is what 4,000, opening stock is what 3,000. It's expected that 12% of finished production will be 40 and have to be destroyed. If it's 40, if I'm Brian, if I'm Bremy. So it's expected, sorry, each cube requires 0.5 kilogram of raw material, which is expected to cost 1 cedi per kilogram. The raw material inventory at the beginning of September is expected to be 1,000 kilogram, and it is planned to be reduced by 25% at the end of the. So closing stock will be what? 75% of it, because they say they are going to reduce it by 25%. Each cube requires 0.25 hours of direct labor, which is expected to be paid at 12 Ghana cedi per hour. CAOK Limited expects workers to be idle for 5% of their hours due to routine maintenance and setups. Now, we are required to prepare the production, the material cost and usage, the material purchase, and then the direct labor utilization cost for September. Look at this. If the question required you to prepare material usage and other ones first, Crampa, you have to prepare production first for you to get how you get the rest, for you to be able to do the rest. All right. And I don't know, there's, okay, let me stop. So I started with the production budget. So starting with the production budget, let me share this one side by side. Now, unit sold is what 10,000, right? That's what we are having here. You know, when we are doing with the production, we start with the unit sold. So the units to sell is what 10,000. That's the same thing. I assume it is sold. Now we add closing stock as usual. Then we come in and less opening stock as usual. That's the same thing as in here. Now we get this 11,000. Now they said that it is expected that 12% of this thing will be destroyed. Expected that 12% of the finished production will be faulty and will have to be destroyed, right? So we bring in the 12% that will be destroyed and then we add it to the production. because it will be destroyed. So we have to include it and then know that this is the total production. And we add it, this is the total production, and this amount will be destroyed out of it. And this is what we will be left to be the net kind of production. But this will be the total production, but this will be destroyed. And then this will be our net kind of production, right? Now, after we are done with that, and we are done, we move on to our material cost budget. As I said earlier, once you know the units to produce, the rest is easy. Now, for the material, we will what? Have to bring in our production units, which is 12,330. The material requirement per unit, as we saw in the question, is 0.5 kilogram. Yeah. Now, when we multiply, we are going to get this. We multiply it, and then we get this. This is the material that is needed for it. Now, for the material, so we are expecting to have what? A closing stock and an opening stock. That's in the question. Now, the raw material at the beginning of at the beginning of September is 1,000 kilogram. But they are saying that it is expected to be reduced by 25%. But remember, we actually add closing stock and we less opening stock. So we find the closing stock, 25% of the 1,000, we add it, and then we less opening stock from it. And then this will be what? The materials that is actually needed, or the materials we will need. Now, the purchase price per unit of the material is 1, and then the total material cost is going to be this 5,910. Now, we move on to preparing the direct labor budget. Now, for the direct labor budget as well, we have the units as well, because we will need the unit before we will know the number of or the amount of labor we will need. Now, we start with our unit as usual, and then we are saying that we will need what? 0.25. It requires, each cube requires 0.25 hours of direct labor. So that's what we are having here. So we multiply, we bring it here, and then we multiply, and then we get the total hours that we will need is what? 3,080. Now, they said that the Coac Limited expects workers to be idle for 5% of their hours. This idle time, no, even though they wouldn't be working, by start of production, like the normal kind of idle time, where maybe when they are transferring the product from one state to the other, or let's say there's some faulty appliance and they are now fixing it and the likes. Even though it will not be used in the production, but still workers will need to be paid. Now we factor in that one, which they said is 5%. 5% of the total hours needed is what? 154. We add it, and then this will be the normal, the 3,080 will be the actual hours we are going to use for the production, or for the particular good that we want to produce. But there will be an idle time, so we have to bring it in when we are preparing our budget. Now, bringing it in will let our total hours to be 3,234. Now, the rate per hour is 12, and when we multiply, we are going to get 38,808, as we are seeing here. Right. So this makes this question solved. So we are actually done for this 10 marks question. Now, let's move on to the next question. The next question, which is B, is saying that 20% of a company's sales are made to cash customers. The records 20%. Where is it? All right. 20% of a company's sales are made to cash customers. The records of the company shows that the credit customers settle their bills as follows. So in the month following the sale, they pay 60%. Then the 2 months after the sales, they pay 38%, and then most often 2% becomes uncollectible, meaning more or less like a bad debt. Creditors paying in the month following the sales receive 5% discount. The budgeted sales for the forthcoming period are as follows. We have 21,000, 30,000, and 27,000 respectively. Now the question is saying that calculate the amount to be shown as received for sales from sales in the cash budget for March. You see, the question specified for March. So when you are done, you have to write some small bro for that. The amount of received for sales for March is going to be this. Now, for cash budgets, we deal with things that are cash related. So anything that is of non-cash, we don't actually consider it like that. Now, we open our cash budget, we bring in our January, February, March, as we are seeing here. And then the sales for the month are here, 21,000, 30,000, and then 27,000. Now, we were told that 20% of the firm's 20% of the firm's sales is actually on cash straight up. So if we want to know the credit sales available for the next month, we have to take that 20% out. So that's what I did there. So cash is 20%. So I take 20% times 21,000, 20% times 30,000, 20% times 27,000. I had 5,400, 6,000, and then 4,200 respectively. Now, when we subtract, we are going to get the credit sales available. So credit sales for January is 168,000. Credit sales for February is 24,000. Credit sales for March is 21,600. Now, let's look at how we are going to get our cash, or how the payments are going to be made. Now, they told us that creditors for the month following, they pay 60%. So find 60% of this credit sales. 60% of this credit sales. Now, finding 60% of it, remember that we are also going to give them what? 5% discount. So after finding the 6%, 60%, and we get a value, we apply 5% discount on it. And when we do that, this is what we are going to get here. And then this is what was transferred to, because this is the sales you made in January, and the 60% is going to be paid in February. So cash is going to be received in February. And then this same amount, we realize that 38% will be paid in 2 months after the sales. So 38% will be what? To be paid in that thing. So 38% of this 168,000, 16,800 is what is going to be reflecting here, right? So that's what is reflecting here. Now, the same thing as what we are seeing here. Credit sales available here will be what? 24,000. Now, 60% will be paid in the next month, which is March. Find 60% of this. 60% times 24,000. And we are getting this. I remember that we are going to give them 5% discount. So now it will be reduced to 95 times 0.95, 95%. And this is the amount we get for this one. So that's the same thing too for this one as well. 60% times 16,800. And this is the full one. Now we multiply it by 0.95, which is taking the discount out. We're going to get 9576. That's what we are seeing here. Right. So for us to know the cash for March, anything of cash nature in this cash budget for March is what we are going to bring. So the cash is going to be the cash that they will instantly pay, which is the first 20%. Here it is 5,400 plus the cash that they will be receiving from the previous sales, the previous month sales. Here is what 13,680 plus 13,680 plus. Then we have what the January cash here that they will be receiving 6,384. We're having 25,464, and that's what we are having here. That's what we are having here. Now, I did this workings here. So if you want to get a February's cash from January sales, what we are going to do is we find 60% of it and we get this amount, and we take the discount out, and then we have it 95% of it. We are getting this. And if we want to also get for March, February 60% is 144. We find a discount, we get this. And then now January's own, which is the 38% times its value, we get this. Now when we add them and then we add it to the actual listing, we get the same thing, right? Okay. So the next part was saying that define cash budget and explain why cash budget is essential. So cash budget is the financial plan that estimates an organization's cash inflows and outflows, or an organization's inflows and outflows of cash at a particular period of time. Now, it ensures liquidity. It ensures that cash day for you to be able to do quick businesses. Now, it prevents cash shortage in the sense that since you know the amount of cash you have available, you'll be planning your stuffs accordingly so that you wouldn't be experiencing any cash shortage. It also avoids idle time of cash or idle cash. Sorry, it avoids idle cash in the sense that if you think that you'll be receiving too much cash for a particular period, then you are going to invest and then get some extra return. You get it on it instead of keeping it idle. Right. So I think this is it for today, and I'll see you another time. Bye. Okay, so let me quickly run through. If you want to take screenshots, chakam, 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 chakam. Oh, I wanted you to take a screenshot of this one as well, or maybe you have already. I'm sure you have already. All right. Thank you so much for your time. I'll see you in the next session. Bye.